Hi, both. Welcome back to yet another budget discussion. Very excited to talk to you both today. How are you?
Very well, thank you. Very well.
Yeah,
After an
well, thanks, Gabby.
interesting budget review this afternoon.
That's the good word for it. There's a lot to discuss today, I think. So we'll take our time with it and make sure we get everything covered for those who are tuning in today. So yeah, as mentioned, a lot that was in there. Some expected, some surprises, both maybe positive and negative. Let's start with maybe the standout policy. What for you guys was the standout policy that was announced today?
I'll take this one first, Gordon.
Yeah, it's fine. Fire away, no problem.
Yeah, it's probably kind of been the most anticipated budget in my eyes, probably since the 2014 kind of pension reforms. Standouts, obviously, there's major changes to things like capital gains tax, huge impacts on inheritance tax planning with how pensions are now viewed in kind of the inheritance tax planning context. That's going to be something which will filter through to clients as well. I mean, Gordon, were there any standouts for you?
For me, it was the eye-watering figures of sort of like the £40 billion in tax rises, which is basically the biggest tax raising budget since Norman Lamont's budget back in the early 1990s. Absolutely frightening. Along with the for homeowners or second homeowners and landlords. That's the one that's really going to hit a lot of landlords and second homeowners with the increase in stamp duty from 3% to 5%. That's bad enough, but it's actually taking effect from tomorrow.
Yeah.
So all of a sudden, anyone who's looking at the final completion date on a purchase of a second property, especially with buy-to-lets, whether they're going to find this additional 2% tax tomorrow to finalise the transaction. So it's pretty scary, really. Those were the two main ones for me.
So maybe sort of moving back towards the dental profession specifically, let's unpack some of the business specific policies that were included in Reeve's budget today. What in that remit, what are the main takeaways for those who might be watching today?
I think if you look at kind of you're looking through kind of two lenses, really, Gabby. I think firstly, looking at practice owners, it felt very much like they're the ones who are going to be kind of most impacted by this, really. But you've got a rise in national minimum wage that goes up 6.7%. So minimum wage goes from £11.44 to £12.21. That might have an impact on some of the staff that are working in a dental practice. And again, you know, probably one of the biggest ones was that NI rise for employers. That's huge, you know, to go from 13.8% up to 15%, and plus that threshold when they start to pay national insurance is being lowered from 9,100 down to 5,000.
Yeah.
So that's a big double whammy. That's going to affect kind of profitability of a practice.
Yeah, absolutely.
And it's going to be then kind of, you know, things that will flow out from that. You know, if you're thinking of wage rises, if you're thinking of increasing pension contributions for your staff, that might be kind of a consideration you have to look at again to kind of see whether it does make sense. Because ultimately, as I touched on before, it's going to really impact profitability.
Gordon, before we went live today, you mentioned a figure there in relation to what Aaron was just discussing, this rise in national insurance for employers. And you mentioned a figure that roughly it would, the increase per employee per year. Would you mind sharing what that was?
Yeah, I was making some notes as I was watching it on BBC. So from employers who pay it at the new 15% rate, that means an extra £615 per employee per year. And it's just like, where is that going to come from? So it's ultimately going to come from the practice profit, but it's then how the practice principal, the business owner, passes that on, or do they take the hit themselves, or do they do? I mean, what do they do? How do they do it? How have they done it in sort of past tax increases? And where it's reduced the profit, because it seems to be a growing trend. It's almost sort of like the business owner that's getting hit by this first and foremost. And that's then how they pass that on. So is that a reduction in pension contributions? Is it something like a reduction in sickness pay that they pay them, if they give them any sort of those sort of fringe benefits? So, and ultimately, yes, it is coming straight out of the profit margin. So it's a very difficult one.
And if you look at the practice owner as well, you kind of one of the opportunities they have obviously kind of comes right at the end when they sell a business, and it kind of brings you on to capital gains tax. You know, there's been a rise in capital gains tax there, taking it from well, at the lower rate from 10% up to 18%. At the higher rate, it's gone from 18 to 24%. Now, you know, what used to be called entrepreneurs relief, which we kind of all know it is entrepreneurs relief, but it's now business asset disposal relief.
Yeah.
That's available for the first £1 million, but there's changes there again. So they're actually going to increase the business asset disposal relief rate from 10 to 14%. Now that doesn't impact straight away, but that will impact from the next tax year. So if you're in the middle of a practice sale, you're really incentivized now to try and push that sale through as quickly as you can.
Yeah,
because it's going to have a massive impact on what you're going to take out. And it feels that, you know, the practice owner is the one often who's taking a lot of the risk. So again, does it disincentivize people to kind of move from associates to practice owners? You know, how's this going to look in terms of how practice values hold up over time? If there's going to be less in terms of equity there when they come to sell. So it's going to have an impact.
In keeping it focused on that business side, is there anything at Wesleyan today that you guys thought was a positive, was something to be perhaps celebrated, maybe pushing it a bit too far, perhaps? I'm watching Gordon's expression there. Is there anything that was maybe a pleasant surprise? Maybe I can rephrase it that way, or anything that you feel wasn't as severe as potentially the media was suggesting it would have been in the run-up to today?
I'll go with my stereotypical Scotsman, and the penny off the pint will do for me straight away. So I'll have that one straight in the bag. But no, it's a lot of things sort of from a financial planning perspective. We were kind of expecting more to do with pensions tax relief and maximum tax-free lump sums and these sort of things being sort of reduced. And we haven't seen any of that. The only one thing we have seen is basically then inherited pensions now being brought into an inheritance tax calculation. So any clients who have basically previously done inheritance tax plan and feeling they've got themselves sorted, that again obviously needs completely readdressing.
Yeah, I was going to ask. So I was trying to follow the inheritance tax announcements today, and I come from somebody who, obviously I don't work in the area that you guys do, but it would be quite helpful to maybe unpack it a little bit. So I'm right in saying here, I'm just looking at the story that I put up earlier on .co.uk.
Okay.
So inheritance tax threshold is extended. It's been extended by 2 years to 2030. So it's essentially an extension to the previous government's policy there. But there was some nuances and some. It was made a little stricter in places. So would you mind explaining what the differences are, please? Is that all right?
Yeah, I can pick that up if that's okay. So
that's fine, absolutely.
We're best of doing it with a story, really. If you have a situation with a client who, let's say, has £1 million in assets, and I'm going to talk about, this is a couple. Let's say they've got a house, let's say they've got cash, let's say they've got stocks and shares. All of those assets take them up to £1 million, okay? Let's say they've got £400,000, which is sat in a personal pension somewhere, okay? So under the old rules, that pension wouldn't fall into the estate on the death of the second person.
Okay.
It sits outside of the estate, it's in a trust. Under new rules, that £400,000 suddenly drops into the estate. So it takes someone from not having an issue in scenario A to suddenly having £400,000, which is over the inheritance tax threshold.
Fine.
And then there's going to be tax to be paid on that £400,000. I mean, actually, it can get even more complicated in certain scenarios. I'm not going to kind of delve too much into the weeds, but I've got clients, for example, Gabby, you've got dental practice buildings in SIPs.
Okay.
You know, suddenly you might be in a situation there where there's tax to be paid on a building which hasn't yet been sold. It's not a liquid asset. So clients really need to start to think about what is their position in terms of liquidity. What, you know, looking at, well, when the inevitable does happen, what's going to be a situation there for the beneficiaries? What are they going to need to find to pay the tax? So, like Gordon said, it's really important to kind of revisit your current situation. And see, you know, really, is it fit for purpose? Yeah.
So you'd recommend anybody who perhaps, you know, has this kind of inheritance plan, has already planned that side of things, to maybe reevaluate if they may have these varying assets and cash basically available to make sure that it's protected the best it can be going forwards.
Absolutely, yeah.
I mean, I'll give you an, I'm in the middle of putting a set of recommendations together for clients. I had a couple with big personal pension funds. That from when I saw them a month ago was actually all outside their estate. But obviously from 2027, that's then going to be brought into their estate. So we're having to basically, I'm just going to tear that lot up and start again. Go back to sort of reassessing the recommendations. Well, there is going to be a little bit of leeway with this sort of thing. I mean, I was at an event in Leeds last Thursday. Got a money marketing event, which is basically it sounds really glamorous, but it's a really boring day out. It's in a room full of financial advisors, from people like myself from Wesleyan to independent financial advisors, different brokers, fund managers, big platform managers, all sorts in there, all looking at sort of like the whole financial world and what's actually going to be happening, what's actually coming from the budget. And the general consensus was, like, you know what, just what will be, because there's so many rumours floating around, especially around pensions at that point, which have thankfully not come to fruition today. What the general consensus was, just let all this settle. Give this a month or so, just let all this settle, and then we'll see what impact it will have on people's day-to-day finances and then for the future financial planning. And that's kind of where we are at the minute with it, I think.
Okay. Obviously, 2 years ago, there was quite an explosive budget that had some quite significant repercussions for the general public, which many people are still very much feeling today. So obviously we've got the benefit of hindsight now to see what's kind of happened since then. But looking ahead, again, I'm not asking you guys to predict the future here, but what kind of sense or immediate sense have you got in the aftermath of Rachel Reeves' announcement today? Do you think, when we're talking about mortgage rates, interest rates, inflation, this kind of these three things that have actually been very much in our day-to-day vocab, I think, for the last few years now. What do you anticipate happening in that area?
Well, I took a quick look just at the reaction of the markets prior to coming on the call. Looked at the FTSE 250, because that's a better reflection really of kind of sentiment in the UK economy. And the market had reacted quite well, actually. It was up, last time I checked, it was 1.7%, but obviously this is quite fluid, things be changing all the time. I suspect that it's probably been kind of quite a good reaction. If you look at kind of that Liz Truss budget, I think when there's kind of unfunded or perhaps uncosted giveaways as such, that does reduce kind of confidence in the UK economy. And that's the reason why we saw kind of such a bad reaction from the bond market, which then in turn had a big impact on the mortgage market. When we're looking at kind of mortgage rates, and Gordon, you'd probably be similar, I guess what we're seeing is things fairly static. Quoting rates for clients today on mortgages at sub 4%, which is a better position than we've been. I always get asked the question, look, what do you think is going to happen with rates? Well, we don't know. But generally speaking, a lot of these things are already priced into the market. So hope is that rates should remain at least kind of fairly stable. And obviously we're going to have another Bank of England meeting that'll set
of course,
the base rate fairly soon.
Yeah. Thank you for that. It's
funny, actually. I was having a meeting last night, just a catch-up meeting with a couple of clients last night, a young dentist and a partner, and I'd arranged a mortgage with them, or for them, a month ago. And we kept getting these emails through on a daily basis from all the big lenders, or rates are increasing, rates are decreasing, rates are doing this, that, and the other. And you kind of get to the point where you just ignore them and sort of like move on and get on with your daily work. But then just before I joined the meeting, I quickly went onto the mortgage sourcing tool onto Mortgage Brain just to see where the deal that I got them a couple of weeks, 3 weeks or so ago, and how that compares to the rate, or yesterday as it was. And we went from basically 4.49 up to 4.64.
Right.
Doesn't sound a massive amount, but typically it's £100 a month on the mortgage.
It's huge. And over a number of months and years, that amounts to a lot of money.
Absolutely does. There is. That's just a very, very recent thing because of the swaps rates, which basically the rates that the banks borrow money at to give to the general public for the deals, the fixed rate deals and stuff, is increased slightly a couple of weeks ago. But it's still very, very stable. The days of the 0.9% or the 1% mortgages are way, way, way gone. I don't think I see them in my working time, that's for sure.
I was about to ask that, Gordon, for those who might be watching thinking, should I hold off and will they return in a year or so? I'm assuming your answer is going to be absolutely
no, not
Yeah.
going. That's just a complete and utter false dawn for a period of about 9-10 years.
Yeah.
I think where we are now, sort of round about the 5%, sort of 4.5%, maybe 5% is kind of the new. That's the norm for me. I think realistically, for mortgage rates moving forward.
Thank you. Is there anything we haven't discussed that you wanted to discuss today?
Well, income tax is one,
Oh,
Gabby.
yeah.
So
Yeah.
that's obviously kind of the main tax that we all pay, income tax. So there's no change really at the moment.
No.
But from 28, 29, the thresholds are going to start to move in line with inflation. I mean, what it does mean is that you have this kind of dreaded fiscal drag where we get dragged into kind of various different tax banners, perhaps that we might not have been in before.
Yeah.
That's kind of that's going to kind of raise a lot of revenue for the coffers. If people's wages are rising with inflation, as you mentioned before, national minimum wage has gone up 6.7%. So that is going to drag more people into taxation, therefore raise more revenue. And it's probably kind of effectively we're going to take home slightly less of our pay than perhaps we might have had if these thresholds were increasing.
Thank you. Anything you'd like to add, Gordon?
Yeah, because the personal tax sort of the freezing of the personal allowances have always been branded as one of these stealth taxes.
Yeah.
Because effectively it's a year-on-year sort of like tax increase with it being sort of static. And I welcome definitely the increase on inflation from 28 to 29, which was great. The other thing you've mentioned there as well, Aaron, about the minimum wage increase. I think, and this is maybe a sort of a wider societal sort of like approach, if you like. And it's great to see that the younger people in society, of 18 to 20s, have got a massive 16.3% increase up to £10 an hour. And that will just only encourage so many more young people to get engaged in the workforce and all these sorts of. I see that as a really good measure, to be fair.
Yeah, no, I would agree with that. Well, thank you. I really appreciate you joining us today. I know it's you've got to kind of quickly digest what's said during the budget, and then you've got to formulate some kind of idea of what you're going to say. So yeah, it doesn't go unnoticed your work and effort to be present here. I mean, if there is anybody who's looking to get their finances, their life sorted, how can people get in touch with you?
Gordon, let you go first.
So you can basically just go onto the Wesleyan website, so wesleyan.co.uk, and you'll find lots of information on there about the budget and everything else, and just everything that Wesleyan can do for our dental professionals and wider medical professionals and education professionals. And you will have an option. You'll see an option in there if you want to book a review with any of our financial advisors. You can do so on the website. Or you can just contact us direct and tell it yourself. And
LinkedIn is another one. So pretty active on LinkedIn.
Yeah.
So if people are looking for kind of additional content, I hate that word, but content, it's something that they can access as well.
Absolutely. And dentistry.co.uk, you do some wonderful articles for us as well, which are very informative for our audience. So thank you for putting those together. It's very appreciated. Well, thank you. I hope you have a wonderful afternoon, and I'm sure you've got a lot to keep you busy for the next few weeks. So enjoy that. I'm glad it's not me.
Yeah. So thanks, Gabby.
Cheers. Thanks a lot, Gabby. Cheers. Thank you.